Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. We're getting quite a bit of data and volatility to kick off the next 3 days, which are going to be rather interesting. And not just because of the FOMC, although every FOMC meeting is going to give us insight into what the monetary policy ongoing is going to be. But the bigger factor is we're leaving October, where there has been a rather impactful but smaller scale tax loss harvesting that went on. Then we're moving over into November. Whatever we saw in October, I would actually treat as a foreshadowing to what we could see the last 2 to 3 weeks of December. So whatever tax loss harvesting happened with the mutual funds with the October year end, everything else with the December year end, we could see just more of the same. But interestingly enough, in between the October to December reality is whether or not the Federal Reserve is willing to, based on data and whatever else they're doing, is willing to commit to, and we know now, data is pretty much telling us no more hikes for 2023 and likely no hikes for 2024. The question becomes, how soon are the cuts coming? We have cuts fully discounted. I'm going to show you what I'm using from a data perspective to say what I'm saying. So if you go on over to Fed Fund Futures, you'll see today 97.2% expectation of a hold, right? You go out to December, this could change, right? This could change a lot. So December 13, 74.6% expectation of a hold. So what we want to see is this 525 to 550 column get taller, exceed 80% ideally, while the 550 to 575 column shrinks, and this 575, as minute as it may be, the 600 column just disappears. That's what we want to see going forward. And then once we get out of this year, what we really want to see, it would be very bullish for equities. It would be bearish for yields, bearish for the US dollar if we start to see the rate cuts become much more a May-June conversation, which, by the way, it is very much a June conversation. But when I look at cumulatively, anything to the right of 525 to 550, which is where we are now, and anything to the left of 500 to 525, 500 to 525 is the first quarter point cut, right? That's got to exceed 525 to 550. We still don't have that, although it's becoming a conversation in June. It's actually not discounted until July. Right? By July, we are expecting the Federal Reserve to cut the quarter point. And what are bond yields telling us in the meanwhile? Why are bond yields still heading down so relentlessly overall in a downtrend while not punching down to lower lows? We did that on October 23. We're certainly not bouncing. This is not a V bottom, right? Why is that? Bonds are really saying, there's a lot of things bonds are saying. They're chatty little futures contracts. But the main messaging is, Powell, you're keeping rates high for too long. And we're sitting here at the lower end of the lower end of the range on the futures contracts, the lower end of the range on TLT, because that, Powell, you're keeping rates high for too long. Hence, yields are staying quite high. And that looks like the downtrend on TLT and ZB. All right. So this is what we've got. And remember, gang, the reaction is all relevant to what we expect. And if you think that Powell on his Bloomberg terminal in the hallowed halls of justice, and that's the super friends, right? So when we take a look at what's going on with Powell, believe me, gang, he knows what Fed Fund Futures are reflecting. This is not unknown to them. He's quite aware. And that's where he's not going to want to, he doesn't, believe it or not, the Federal Reserve does not want to upset the apple cart. They really don't. They know what data they're looking at. You better believe he's got a good idea of what non-farm payroll is going to look like Friday. He probably has a pretty good idea of what JOLT is going to look like at 10 o'clock. But we're more interested in what is the data that comes after the FOMC press conference. So remembering he's got all that in his noggin before he starts answering questions. Bottom line is what I talked about yesterday in the videos back over at the Simpler Trading YouTube channel. We don't want to talk about the markets, although it's kind of typical lingo of traders just to talk about the markets, but there's no such thing as the markets. There are currencies and there are treasuries, and there's indices and energies and metals and so on. So oftentimes when people talk about the markets, they're talking about stocks, and more specifically, they're talking about the S&P 500. So yesterday, I had two videos. One, for those of you that want to keep with the day trading, as do I, by the way. If you want to keep with the day trading, I'll walk through two of our trades yesterday. They both happened to have been winners. But full disclosure, Monday, I went 0-3, right? Three very small losses. Let me ask you something, gang. If you're looking at really tiny little gains, so you can artificially pump up your win rate, right, in your mind to feel better about the process, and then you're taking huge losses, at the end of the day, it's not about, well, the win rate's whatever percent, but the losses are 3-4x the gains, right? That's the problem. So when we look back on the week, I took three small losses, 3 in a row on Monday. And then on Tuesday, we had actually two really nice grinding higher QQQ calls, SPY calls. That offset the small losses. We've got to keep losses small, not just in day trading, but in scalping, but in swing trading. In every type of trading we're doing, we cannot rest on some outlandish win rate without looking at the actual loss amount versus the gain amount, which is why you don't hear me talk a bunch about it. And you'll also hear me say, if your win rate's above about 70-75%, that's what you're guilty of. You're taking tiny little gains and you're likely taking very big losses. I've been there, done that. That's why I can tell you that with such confidence. Been there, done that, right? So be careful what you're optimizing for. Yes? All right. That being said, check out that video if you're looking for how I'm day trading still. And then the question I get the most is, Raghee, is the bottom in? And I talk about this topic of the markets, right? They don't exist. There's no such thing. What has the best chance of moving higher as we wind down 2023? And it's the NASDAQ. One of the things we talked about at the Simpler Summit, and by the way, no mo FOMO, I'm still rocking that coffee you gave me, a little custom blend. I'm still rocking that. If you take a look at the video, if you were at the Simpler Summit, one of the things I talked about is understanding what's inside the index. And what's inside the NASDAQ is largely far better than what is inside the Dow for sure, the Russell for certain, and even the S&P. And the culprit is, for the most part, financials, regional banks, and big banks. All right, so that's what we've got going on this morning before FOMC. Powell knows that we are largely expecting a hold of the 525 to 550 rate for the remainder of this year. Powell knows that we're expecting the Federal Reserve to act by at least July of next year. He also can see yields. He can also see the strength in the dollar, and he looks at those markets. And believe me, these are not people completely ignorant to the markets, indices, treasuries, currencies at all. They understand. Ultimately, bonds are very clear in what they're telling the Federal Reserve. You're keeping rates too high for too long. So let's see what it is ultimately he does. This is what we know going in. And I don't say no as in I turn the TV on. I mean no as in data, right? We look at the data, the Fed fund futures, we look at the yields, we look at the euro, and we can see that the NASDAQ is our relative outperformer. All right, so with that being said, let's tackle the first question here. George asked, will Jerome spook the market? So spook is driven by data. Spook means if he deviates from what we think we already know. What we think we already know is in Fed fund futures, and what we think we already know is exactly what we outlined there. So that we don't know, right? I can't tell the future. I haven't gotten his open remarks. We'll find out, right? But at least we know what the measuring stick is. And by the way, George, that's all we can ever do. We can't predict the future, but we can know what the measuring stick is. We can know what the actual versus expectation is, and then know then if there's a spook or not. Randy, Tesla. So when I talk about the NASDAQ, Tesla is not a relative outperformer. Yeah, be really careful there, my friend. Of all the Magnificent Seven, which by the way, are all weighted quite heavily within the NASDAQ, XLK, XLC, XLY, SMH, they're all quite heavily weighted in there. Tesla is one of the worst. It's the weakest. When I say worst, it's the best downtrend. It's the only downtrend. It's a stock that I would focus to the short side on, or I'd leave it alone and I'd look for the relative performance that's in Meta or Microsoft. It really depends on what you're looking to do with it, right? So Maddie, when you ask about Microsoft, yeah, I think that's a relative outperformer. Meta is a relative outperformer. So if the question is, Rog, I want to find a Magnificent Seven symbol that I want to buy, I would put that Meta, Microsoft, maybe Google, anything still above the 200 exponential, anything still testing that 200 exponential, as Google did last month. I say last month, as they did a couple of days ago. But when we talk about the best potential stock for shorts, it would likely be Tesla for me, because it looks markedly more bearish than everything else. And Maddie, Microsoft looks more bullish. So again, it depends on what we're looking for. And that's where I say we want to have two watch lists. We want to have one that is about what we want to buy. This could be day trading. This could be swing trading. What are those symbols that we want to buy? And then we juxtapose that with what are the symbols we want to short. And the same symbols cannot be on the both watch lists. I cannot have something that I'm open to shorting on the same watch list as some, as things I'm open to being a long call in. So that's where we have to separate. And I think Tesla is a great example of potentially the downside. All right. All right. So then next up is Ryan asks, could I give an example of what made me favor the long side of the QQQ? Let's see. How can I say this quickly? So Ryan, it was basically, and I think I talked about it in the video. So what I would say is, Ryan, definitely check out the video, because I think I went through that there. But really, it was very much what were the sectors doing? And frankly, Ryan, in a lot of ways, and I think I mentioned this in the video too, SPY and QQQ, the only thing I could do, where are my drawing tools here? Bear with me. All right, so here's my drawing tools. The only thing I could do, the first opportunity I had after the bell, there's our bell, we're sinking out of the red zone pre-market, pre-bell, right? So, I mean, yes, that could have been a zone, but that wasn't where we were focused, yes? So after the bell, this was the first opportunity. Neutral environment as we sunk into the range. Oversold stochastic as we sunk into the range. That was just maybe not my favorite thing to do. It certainly wasn't, because we were still trading below the previous session close. But I had a bullish environment that preceded the neutral. And yes, I did go over this in a lot of detail in that video, but this is the Cliff Notes version of it. That's it. We got down into the hourly price movement range, which is a gorgeous, self-correcting, updating, insanely accurate zone based on 6 months of volatility price movement range. And that was the reason. But as far as some of the nuance, yeah, Ryan, check the video out. And I think I spent about, 6-7 minutes in that video walking through that. So I think you'll get a lot of benefit from use this setup tomorrow. Yeah, that was the day trading conversation. Yeah, almost 7 minutes. All right. Hey there, Nomo. I'm loving it. I think I was telling everybody, I think you were still in Orlando for the summit. I was telling everybody that you gave it to me during the summit, and I had a sum total of 8 espresso shots of it yesterday. So yes, absolutely. Let's see what else we have here. iPod Touch asks, "What do I think of the Bitcoin futures breakout?" iPod Touch, I'll be frank, I'm not even looking, not even paying attention. I'm not actively looking at Bitcoin, gang. And I get the question from time to time. I'm a hodler. I'm diamond hands. I am seldom looking at Bitcoin on a regular basis. Not that there's anything wrong with looking at it. I just haven't. I just haven't. Could tax loss harvesting that ended yesterday cause short covering in the bonds and stocks? Mike, it's definitely so. This is what I'll look at it this way. Every trade has a trade story, right? There's a hypothesis that we start with. And so if my hypothesis is short covering or short squeeze or whatever, I can start with that, but then I need to see evidence, right? I need to prove it. So it's very much I can have this idea, right? I can have this idea, and then I have to know at what point, right, it's valid. So let's look at it this way. Let's go Socratic method on it, right? What's the question? Could yesterday, could we have a short covering rally or a short squeeze? So the question is that, right? We've opened that up. That's the question. Then I ask myself, well, what would be evidence of that being true? That's the trade, right? That's the trade. It's amazing how that old school stuff works, right? Okay, wait a minute, Rob. Socratic method trading? Yeah, why not? Let's start with a question. Let's find out under what criteria that hypothesis would be true, right? So if I'm trading above, for example, today, the previous session close on bonds, if I'm trading in an uptrend on the 5-minute chart, all of a sudden I've got the makings of a long position in ZB or TLT. So the criteria to answer that question is really going to come from whatever indicators you're using. So Mike, let's say I'm doing the same thing with the NASDAQ, all right? Where am I in relation to the previous session close, right? I can just do that here real quick. Where am I in relation to the previous session close? Above it. What is the structure of the 5-minute time frame? And take a look. Take a look there. It's green. So whether or not that green trend sticks through the clearing range, I mean, clearly 815 right in here, you can see how the ADP really launched everything higher. So we got the first inkling. We have 3 different jobs releases. ADP was first, JOLTS is next, NFP on Friday. But we got the first one at 8:15 Eastern this morning, and we can see what it did. All right, so if we can maintain this and move higher, this is going to remain green. We're going to remain above the previous session close, above the 200. So I've got a question, and then I'll say, okay, this is how I would answer it. And that's, Mike, that's how I would do it. So I've got a hypothesis. I've got a trade story. Now I've got to know under what criteria that would be true. And then when I've got the criteria, then I've got to trade, right? And that's what trading is, right? We have a thought, and then we ask ourselves under what conditions would it be true? And then I think the most important question is, can I manage risk, right? Can I manage risk through that? So it's not just a matter of, 14.6 is a target, right? Be careful, because one of the worst things that has come about, and I would actually blame the Big Short. Yes, I'm going to blame a book. One of the worst things that's come out is traders now confuse targets with trades. They now confuse the prognostication of a crash or a massive rally with a trade, as if the target justifies whatever journey your price, our money has to take on the way to it. So be careful, because sometimes the journey is untenable and trading is in that path to the target, right? So that's ultimately the issue with where we are right now. Sure, we could. I think the NAS has, based on what I see, exactly what you're saying. It could move higher, but if we get a lot of volatility from JOLTS, if we get a lot of volatility from the Federal Reserve, maybe that journey to the target is untenable. Maybe the uptrend can't hold, and those are things we have to monitor. But I would not doubt it, and we're already seeing evidence of it, right, Mike? So we started with the story. Now we have the price-based evidence of it, and we'll just trade what we see, right? And not what we think, which is really a challenge. It is quite difficult to do that. All right, gang, that is a wrap. I will see you all tomorrow, same time, same station. Keep the questions coming, keep the symbols coming, and we'll just start to tackle the rest of this year together, gang. All right, be good to each other.